So you started a new LLC and it's time for you to get business credit, or maybe you've been a business owner and you're ready to leverage OPM. And one of the most important things to scaling a business is being able to use other people's money to grow and expand. One of the things that you can do is you can obtain a line of business credit or a business loan in order to get yourself where you want to go. But you first have to understand the rules and how to leverage business credit the right way. In today's video, I'll be covering exactly how you can obtain business credit through your LLC, how to get business credit the fast way, and what you need to be aware of in case you're trying to leverage business credit to scale strategically. And if you're somebody that's like me and you want to have more knowledge in your life to be able to grow faster, this is one of the ways in which I scaled my business, and it might be one of the ways in which you scale your business too. Yeah, that's right. Many LLC owners need credit, just like individuals do. So in this video, I'm going to explain everything you need to know about business credit. I'm going to include what it is. I'm going to include how it works. I'm going to include how you can get it for your LLC the fastest way possible. And I also would love for you to stay all the way to the end of this video because I'm going to share one piece of golden information about business credit that could expedite your process of getting funds faster. So without further ado, let's dive into what business credit is. All right, guys, business credit. It refers to your business's ability to borrow money. Now, your business's credit is highly influenced by your business's credit score. A business credit score is like a personal credit score, except it's for a business. Now, this means that your credit worthiness of your business is going to be carefully tracked and monitored, just like your personal credit worthiness is carefully tracked and monitored in order to generate a credit score. Your business's credit score helps to give creditors or lenders or vendors and suppliers a better understanding of how well your company pays its bills and how likely you are to pay them on time. This helps them to make a very easy decision around whether or not they would like to lend you money or do business with you. The most important parts to getting business credit is understanding the phases of obtaining business credit. And phase one, it will always exist as the importance of establishing business credit for your business. Here are the reasons why it is crucial to have business credit. Number one, you will never know when you will need to borrow money. I do not need to remind you what happened during COVID-19. Please just close your eyes and go back to that moment in time. During the course of business, you might find that you will be needing money either through the form of a loan, a line of credit, a credit card, or another method because there are unforeseen circumstances that could arise as being a business owner. And oftentimes, borrowing money is key for growing your business, not just for helping out in hard times. Now, let me give you an example. Let's say you own a clothing company, as many people do, and you have a product that you just started selling. In this situation, you might need a loan of $100,000 in order to get more inventory if things are selling very fast. If you had bad business credit, you might not be able to get the loan, which means your business might start to tank just as you're starting to take off. However, if your business credit is good, then you might be able to get the loan, get the inventory you need, and increase your revenue, increase your margins by preventing your sales from falling by keeping your best-selling products in stock. The second reason why business credit is important is it gives you more flexibility with vendors and with suppliers. If you have good business credit, then your vendors and suppliers might give you a little more leeway when it comes to payment times. For example, instead of making you pay at the time of a delivery, the vendors and suppliers might allow you to pay 30 days after a delivery or 45 days after a delivery, and this can help you with the cash flow in growing your business. Now, if your suppliers do not require immediate payments for you, it gives you much more flexibility and you can make your life a lot less stressful in this matter. This is because you will actually have time to generate more sales using new supplies or materials before you have to go back and pay them. It is also, guys, just a lot easier to make payments over 45 days than it is to make a payment in one day, right? Now, the third reason to why business credit is super important is it makes it easier to get lower interest rates. If you're going to be borrowing a lot of money with your LLC, then you definitely want to be able to get the lowest interest rates possible on things like business loans, business credit cards, and other items. So the lower that the interest rates are on the money that you borrow, the less expensive the debt is, and the less money you will have to end up paying back in the form of interest throughout the life of the loan. So this is strategic when it comes to building wealth. Now, the next thing that we need to understand is what is phase two to getting into business credit. Phase two of getting into business credit is understanding what you can use the business credit for besides just business loans and getting business credit cards. Business credit is frequently used by insurance companies to generate premiums. So if your business credit is better than most, then you can get lower premiums for various types of business insurance that you will eventually need as a business owner. Furthermore, Business credit is also commonly used by investors when they're evaluating a business and deciding whether or not they would like to make an investment in the company. So having good credit can increase the chances of your business successfully attracting investors if you plan to do this at some point to finance your next phase of growth for your business. I have a lot of customers who are like, Karlton, I'm going to take this product public. I'm going to do this round, then I'm going to do this round. I'm going to do this round. Well, let's start off with the round of establishing good credit first, and that could help us out to attract investors. Finally, business credit can also determine whether or not you qualify for contracts with other organizations. This is so huge if you're somebody that's getting into government contracts. Certain organizations require certain levels of business credit in order to even work with you. Now that I'm kind of giving you guys a better idea of like how you can use business credit outside of just getting business loans and business credit cards, you need to understand phase 3 of establishing business credit. How do you actually get the business credit? Now that we discussed what business credit is and why it's important, let's talk about how you can actually get it. Step number 1 is you're going to need to register your LLC in your state. If you haven't already done this, and this is something that you're going to need to do. If you need help setting up an LLC and registering it with your state, then you can watch my other videos on how to set up an LLC. I'll throw a link in the description below this video on setting up an LLC. Now, step number 2 is get an employer identification number or an EIN number from the IRS. Your EIN number works like a social security number for your business, so you'll need this number when you apply for business credit cards, business loans, and pay taxes. This is the number that separates you from your business. We don't want to give out our social security number. That's not business credit, that's personal credit. So you won't be able to build business credit properly if you never have an EIN number. Step number 3, open up your business bank account. I don't know why people don't do this after they get an EIN number, but please go do this. Generally speaking, having a business bank account makes your business seem more credible in the eyes of lenders. For this reason, you should definitely make sure that you have a bank account open the moment you get your EIN number. And step number 4, get a dedicated business phone number. I don't know why people forget about this step. This is a crucial step in order to make your business seem credible to lenders. Having a dedicated business phone number and making sure this phone number appears on your business's website, your social media accounts, local directories is crucial to make sure that your business appears professional. Step number 5, apply for a DUNS number. Now, a DUNS number is a number given by Dun & Bradstreet, a major business credit bureau in the United States. Having a DUNS number allows the agency to track your business's credit score. This is so important. If it's not being tracked, you're not going to be able to grow your business credit fast. Step number 6, you need to ask vendors and ask suppliers to report your payments to business credit bureaus. This is a key step to starting to build your business credit and starting like the paper trail of transactions that are actually being reported to creditors. If the vendors you are currently working with already report to business credit bureaus, then great. If not, then consider switching to ones who are willing to do this if your current vendors won't do it. If they don't do it, you should probably look at switching vendors. If not, then this is a way in which you would slow down your ability to get business credit faster. Also keep in mind that paying vendors early as opposed to just on time can boost your business's credit score to rising faster and higher. Now, here's step number 7. Apply for a business credit card. Simple, right? Business credit cards are usually one of the main types of credits that contribute to business credit scores. So to build business credit, you should apply for a business credit card. Once you're approved, try not to use more than 30% of your available credit and make sure that you pay all of your bills ahead of time, not on time. And then step number 8, keep an eye on your business score routinely. After you have completed all the other steps that I just shared with you, the last step is just to keep an eye on your credit score and make sure that all the information that is reported to them was accurate. The last thing that you need when you're trying to build business credit is to have inaccurate information weighing on your business score or business credit, and you didn't even know about it. So you want to make sure everything was submitted correctly. Now, another thing to keep in mind, and this is really important, is if your LLC is a small business, especially if you are the sole member, there's a very good chance that creditors, lenders, vendors, etc. will not only look at your business credit, but they'll also look at your personal credit. So you should also make sure that your personal credit is in good standing in addition to making sure that your business credit is good. So here are some things that I commonly get asked in my office. What are the main business credit reporting agencies? Some of the main business credit reporting agencies are the same as they are for personal credit: Experian and Equifax. As mentioned before, Dun & Bradstreet is another one of those top business credit reporting agencies, okay? But Experian and Equifax are the top reporting agencies. Finally, CreditSafe is another, if you haven't heard of this, CreditSafe is another business credit reporting agency that you should also just be aware of. Now, the next thing I want to talk about is What are the differences between having business credit versus having personal credit? And despite the fact that they are calculated based on similar things, there are very important differences between business credit scores and personal credit scores that we have to talk about today. So here's the number one, the numbers in the scores. Personal credit scores range from 300 to 850, with 300 being like the worst and 850 being the absolute best score you can get on the personal side. Business credit scores, on the other hand, range from 0 to 100. 0 is the worst, 100 is the best on the business side. So it means that you should always be striving to get your business credit score to as close as 100 as you possibly can. And if your business credit score is between what's called 80 and 100, then you're considered to be at low credit risk. This is ideal, and having a score in this range makes it so much easier to get approved for business credit cards, low interest rates, and insurance premiums. This is what you want, a good score. Now, how do you check the scores? For personal credit, that's not just for anyone to look at, right? There's a process that can only be checked in certain circumstances. However, with business credit scores, anyone can check your business credit score at any time. They don't need your permission to do so. In other words, personal credit scores are more private and business credit scores are more public. Here are some factors that go into your credit score that we should talk about. The factors that go into your business credit score are payment history, age of credit history, debt, and debt usage. And also, last but not least, is the industry risk and company size. Those are the only last two ones. But the big ones are your payment history, the age of your credit history, the debt, and debt usage, okay? The factors that go into a personal credit score are payment history, amount of debt, new credit, credit mix, and average length of credit history. So the factors that go into business credit scores and personal credit scores are similar, but they're not the same. Now, the next thing I want to talk about is what is the difference when I go through the process, Karlton, of establishing business credit. What's the difference between using an EIN number versus using my own social security number? Business credit scores are tied to your EIN number, and personal credit scores are tied to your social security number. So just to remind you again, guys, you need an EIN number if you want to establish business credit. Let's not play around here, okay? You need an EIN number if you want business credit. If you want personal credit, you already have a social security number when you were born. How can you, if you're wondering, how can you check your business credit score? Where do you go? Checking your business credit score is not the same as checking your personal credit score. And this is because if you want to check your personal credit score, you can go to a number of popular platforms to check it for free. However, the same cannot be done with business credit scores. Usually with business credit scores, you're going to have to pay to check them. For example, if you want to view business credit scores with Equifax, you'll have to pay around $100 for you to be able to check just like a single report. And then they have a package where you can pay upwards to like $400 to be able to check 5 different reports if you'd like to. There's so many ways to view your credit score for cheaper than this. So just wanted to put that out there. But most of the time you'll have to pay if you would like to view your business's credit score or the credit report of any other company. Now, what are some things that can harm your business credit score? Because just like with personal credit scores, there are a number of things that you can do as a business owner that can decrease your score. If your business credit score goes down, then it becomes harder for you to get access to credit. It becomes harder for you to get lower interest rates and other perks of having good business credit. So here are some of the top things that can harm your business credit score. As you probably already know, number one is missing payments. This is definitely something that you want to avoid because it can lower your business's credit significantly. These can be payments to vendors, suppliers, lenders, creditor companies. But anytime you make a payment late, it can hurt your ability to get additional funding. Number two, using too much of your available business credit. Let's say you have a business credit card with $10,000 of available credit on it. If you use $5,000 of available credit, then you would have a credit utilization of about 50%. Unless you're paying it off immediately, this can be a little bit too high and negatively impact your credit score. So instead of using like a large portion of your available credit, you should try to use the least amount possible or use great amounts and then pay them off immediately right after. This is how you can boost your credit score really fast. Now, number three is applying for credit too frequently. And this is something that many people just don't know. Just like with personal credit, if you apply for business credit too frequently, it can lower your score too. And this is because for credit, too much can make your business look like it is relying too heavily on debt, which can be a warning sign for financial companies, right? So to prevent this situation from happening, just try to space out your credit applications. I typically space out my credit applications every 6 to 12 months. If possible, try not to apply for credit more than once or twice in the year. If your business is struggling to accumulate cash, then it can be tempting to keep applying for credit, but you really got to avoid this if you're trying to grow strategically. Number four is completely ignoring it. One thing that you definitely don't want to do regarding business credit score is to just ignore it. This is because sometimes mistakes can occur on your credit report that have negative impact on your credit score, and you just don't know about it because you haven't been taking an eye or a look at it. So, for example, sometimes credit accounts that belong to other companies are accidentally added to the wrong credit score. Let me repeat. Sometimes credit accounts that belong to other companies are accidentally added to the wrong credit report. This is just one example of a mistake that can be made on your credit report. So you want to keep an eye on your credit report just to make sure that this types of incidences aren't happening and that everything looks accurate. Now, the next question is how long does data remain on a business credit report? Because this is important for us to know. Sometimes people have data on their business credit reports they would rather have removed as soon as possible. Let's just say, for example, you once went through a bankruptcy. You might want to have that removed from your business credit report sooner rather than later. Here's how long various types of data remains on your business credit report. If you have data that's considered what's called trade data, this will remain on your credit report for 3 years. If you have data on your report that's considered judgment data, that will remain on your credit report for 6 years and 9 months. If you apply for any bankruptcies and get approved, the bankruptcy typically remains on your credit history report for up to 9 years and 9 months. And if you have any tax liens typically are about 6 years and 9 months. Collections are about 6 years and 9 months. And then we have uniform commercial filings, which are about 5 years. And then any bank, government, and leasing data that's on your report will stay on your report for about 3 years. As you can see, guys, some data stays on your business report for a significantly longer time than other data, and bankruptcies stay on your report for the longest, being at 9 years and 9 months. So please watch out for this. Now, in some cases, declaring bankruptcy is unavoidable. For example, if your business completely fails, then you might have no choice but to declare bankruptcy. But if your goal is to keep your business credit score as high as possible, you should do everything you possibly can to try to prevent bankruptcy from happening. Now that we've gotten to the end of this video, as promised, I'm going to deliver a golden nugget of information regarding obtaining business credit, and here it is. When you're shopping for business credit, the first place you should look is with any credit card companies you already have a history and a relationship with for personal credit. The reason why is because if you already have a good relationship with a credit card company, and if they know that you've been paying your bills on time, there's a good chance that the company will allow for you to get approval for a business credit card faster than any other company will. So if you don't already have a business credit card, then the credit card company may only approve you for a business credit with a low credit limit. That's fine. You can start there with a low credit limit. I've seen some as low as $750. Pay your bills on this credit card for 6 months, and if you need to, you can ask the credit card company to raise your limits. They will most likely be able to move your credit limits based on the amount of transactions that are happening and how well you've been paying your bills on time. And hopefully your business credit score will start to go up during this period too, making it easier to apply for other types of business credit afterwards. Well, that's it for today's video, guys. I hope you like it. And if you have any questions at all about establishing business credit, establishing your LLC, or even general tax questions, feel free to get in touch with my team by clicking on the contact link below in the description. Also, feel free to check out the Tax Alchemy course. There's a link for that as well. With this course, I teach you strategies used by the super wealthy to minimize their tax obligations legally, and how to leverage real estate as a form of an investment to avoid W-2 and 1099 taxes. You can also find the link in the description right below. So don't forget to like, comment, subscribe if you enjoyed this video. I look forward to seeing you on the next one. Cheers.